Today's main focus is on Ethereum. Now look, I love Ethereum. I think it's one of the best projects on the planet, but today we're going to look at it from a technical standpoint. Forget the news, forget what you've heard. We're going to look at the psychology of the market by using Elliott Wave theory and Fibonacci theory, which will tell us if Ethereum is reaching a top before it's going to have a 20, 30, 40% pullback before it makes all-time new highs. So if you're buying right now, just be mindful. So today's video is don't buy Ethereum until you see this to the end. And I'm going to tell you exactly why. So quick recap, Elliott Wave theory, Fibonacci, if you're not familiar with it, the market moves in cycles and trends, and typically it moves in a 5-wave cycle and then a big ABC correction. Also, what's really important to understand that each of these waves, which are very typical in the market when you really get familiar with this, breaks down into subwaves. So wave 1 breaks down into 5 mini subwaves. Wave 2 typically breaks down to a minimum of 3 waves. Wave 3 is what we're going to focus on today, and I'm going to show you exactly why. Typically breaks down into 5 waves, and then wave 4, minimum of 3 waves, and then wave 5 itself, 5 waves as well. So this is really, really important because Ethereum right now looks like, and it's all high probability trading and investing strategies, looks like it's right here, potentially at a peak of a wave 3. What do we get after a wave 3? Well, we get a wave 4 correction. If that's the case, we need to be prepared. If you need to exit or if you're looking to buy right now, it might not be the best time. So I got published, just if you don't know who I am, my name is Jagir. I got published and featured in this book in 2008, High Probability Trading Strategies. One of the best technical traders on the planet, Robert Miner, who really goes into detail of Fibonacci, Elliott Wave theory, time analysis, etc. But today we're going to focus really on price and pattern. If you like my energy, the education, I would really appreciate a like because it gives me feedback that this is useful for you. If you want to see my video tomorrow on the Lena, I'm going to tell you it's a really great setup. Potential wave 2 low for a wave 3 really bullish move. I'm going to do the analysis for you. If you want to see that and don't miss it, subscribe to the channel because I'm going to start doing regular videos for you to give you the high probability investment and trade setup so you can maximize your gains and minimize your downside. So going into Fibonacci and Elliott Wave, there's a couple of things that I really want you to understand. I'm going to bring up my laser pointer here so I can emphasize it to you. Now over here, I've written coincidence of time, price, and pattern. Today we're going to focus on price, Fibonacci ratios. I'm going to go over that in detail, and pattern, Elliott Wave patterns. So trend change is highly probable when the market trades into a time, price, and pattern zone. And I believe Ethereum looks like it's coming into a really high probable price and pattern zone, which I'm going to cover with you live in a second. Elliott Wave. If you've not come across Elliott Wave before, the main thing to take into account is this. The markets represent the process of mass psychology, which grows and contracts in a fairly predictable and identifiable patterns. And I'm going to show you some of those patterns today. But we're combining it with Fibonacci ratios. This is where it's a game changer, which is a leading indicator which shows you what's likely to happen next on the basis of mass psychology. So Fibonacci ratios, a series of ratios related to the root ratio of 1.618, also known as the golden mean or the divine proportion. These are the most prevalent ratios found in all forms of natural growth processes, including the process of mass psychology. Now, just so you know, one of the main things that drives the markets, if you're ever wondering why it goes up and down, is the emotion of fear and greed. And the markets show that clearly. So we're going to jump into a live chart. But before we do, I just took this screenshot before the call, or before this live video. And now, this is what it looks like Ethereum is doing. A wave 1, 2, 3, 4, and a potential wave 5 high of a wave 3. Now I'm going to go into that in more detail with some Fibonacci ratios that shows potential resistance zones where we might see a big drop before we go on to see all-time new highs. So I've just done this for you. So this is like a zoomed in version. It's a wave 5 of a wave 3. So this is what we're looking at. This is the live chart, and this is what we had on the diagram. So this is the theory, and this is the live chart. So we're going to jump into a live chart now to see if we can get this really, really clear. And I'm going to show you some of the key Fibonacci ratios, extensions that shows if this is a high probability resistance zone. And again, remember when time, pattern, and price coincide, it's highly probable that we'll see a reversal. So let's jump straight in to a live chart. So this is Ethereum. So I was doing this earlier on today for you. Now the key things, there's a few key extensions of Fibonacci. So if you're not familiar with it, again, I highly recommend the book. It's a brilliant book that goes into great depth. Is the Fibonacci extension ratios we're going to go into. So if you've used, this is TradingView, by the way, this software, it's brilliant. There's a free version, there's a paid version with extra features. We're going to go to trend-based fib extensions. So we're going to do an extension. Now, one of the end of wave 5 extensions is 62%, which is 0.618, which we're going to cover now, and a maximum of 100% of wave 3. So look at this. We're going to take from this wave 1 low, so we've got this wave 1, 2, from this wave 3 high, let's just get this magnet on here, and we're going to project it from the bottom of wave 4. But we're going to select these particular ratios. Let me just do that one more time, that didn't select. So we're starting from this wave 1 low, we're going to go to this wave 3 high, and then project it forward. Why is it not working? Let's have a quick glance. Let's try it one more time. Oh, that's why, because it's clicking there. There we go. Okay, now we got it. Okay, let me just move this 2. It's clicking on this 2. That's why. All right, here we go. All right, we're in business. All right, so we're looking at these 2 particular ratios. The first one is this 62%, which is represented by 0.618. But the maximum extension typically for an end of wave 5 is 100%. So you can see these lines on the right over here. This is the 62%, this green line. And then this red line is actually the 100%, which is typically the maximum of a wave 5. And we're looking at a wave 5 of a wave 3. So because the 62% has been exceeded already, we can get rid of it. And it's likely that we'll get a wave 5 high near this 100% extension. So we're going to get rid of that. So now we have this real clear price target. But by itself, it's not enough information. So we want to now zoom in. And what you'll see down here is this wave 5 also breaks down into 5 waves. So we can do another price extension. And when there's a cluster of prices, it becomes a really highly probable resistance zone. So we do the same price extension, which is again, this wave 1 low, this wave 105, wave 3 high, from the wave 4 low. Now we'll see we have this literally a cluster of prices, 2 of the key price zones. Now there are other retracements and extensions that we can do to get even a clearer picture, but the 2 key things that you want to take out from this video is, if I just zoom in here for you, this resistance zone, this higher number, is from a larger time frame, and then this one is from a lower time frame. And when you get a coincidence of pattern and price on multiple time frames, it's likely that we're going to see a reversal. But now if you look at this also would tend to break down into 5 waves. So if I just zoom in, so now we're on a daily chart where every bar represents 1 day. So 1 bar represents 1 day. We're going to zoom in. I'm going to click over here and I'm going to go into a 4-hour chart where 1 bar represents 4 hours. Now if I just get this back into the right proportion over here. So now what we're paying attention to is this part here. So we can see that there looks to be a wave 1, 2, a wave 3. So what I'm anticipating, and I want you to anticipate this also, and we'll see how it plays out. Now this is not guaranteed, but it's high probability based on the metrics that we're looking at. We should see something like a 1, 2, it looks like we've got a wave 3 unfolding here. Even though it's at the price target, the full pattern hasn't unfolded. So we should expect some type of wave 4 and then some type of final wave 5. And if that occurs, we want to be very aware of our Ethereum position. Why? Because typically after, if I just pop back into the daily chart again, typically what happens after a wave 3 high, so this is the wave 5 or wave 3, we typically get a 38.2% retracement. So I'm going to draw this here. Just so you have some, let's just say this was the wave 3 high. I'm going to draw it here so it comes up. Typically a wave 4 retracement is between the range of 38.2 and 50% retracement. So if this plays out the way it's looking very likely, we are likely to see a retracement back into the range of, believe it or not, 2,000. Potentially it will pull back 30-40% to 2,000. It will correct, and once it finishes the correct, then it will look to make an all-time new high for wave 5. So long story short, let's kind of summarize. Let me pull up this PowerPoint again just to make it crystal clear. Let's go to this one over here. So 1, 2, 3. We look like we're in this red zone over here. Let me pull up my laser. There we go. Red zone over here. We should see potentially, it's highly probable, a pullback. So if you're buying Ethereum for the first time, most retail investors, newbies, FOMO in, fear of missing out. They do a panic buy. You've seen the price of Ethereum go up. It's gone from $500 to $1,000 to $1,500 to $2,000, $2,500, now $3,000. Surely it's going to keep going up, right? Well, in the long term, in terms of the rest of this year, I say highly probable. But in the next 6 weeks, 8 weeks, maybe even 10 weeks, we're likely to see some type of pullback, which will unfold into a likely wave 4. And if that's the case, that will be a much better time to buy. But we're probably going to see short term a bit higher because it's like a wave, another wave 4, wave 5, and then we'll see that 40% pullback. Likely, remember it's likely, and we want the probability in our favor. If this has been useful for you, click the like button, subscribe. I'm doing a video tomorrow on Lena. It's a great setup for a long position with low risk. I'll go cover it with you. But today was about Ethereum. Be mindful. Know the market is hitting these high fibro ranges, which is the resistance point. We'll tend to more often than not see a retracement, and it could be as big as 40%, maybe even 50%. And if that occurs, just be mindful so you're managing your investment really, really properly. And if you're buying for the first time, now might not be the best time. And if you're holding a lot of Ethereum and you're looking to hold it through, pulling back 40% is healthy, it's okay, because in the longer picture, when the final wave 5 happens of this bull run, then we're going to be in good hands. So I'm Jagir, I'm your coach, I'm your mentor, always looking to bring you the best technical analysis. We're also going to bring you some projects in the near future, which are looking highly probable for some great setups, mid-market cap, high market cap, but also some really young projects that have some 20x and 50x potentials in the near future. Like, subscribe, and I'll see you in the next video.